Phil, the MoneyTalk portfolio pretty much flat from the last 3 months, but of course markets in that time have been trending lower. How is the portfolio doing for our viewers who are watching?
Well, flat in a down market is actually very good, because if the market, stocks drop 20% and you're flat at 100%, then you can buy 125% more stock than you could before. So that's a victory right there, assuming things ever come back, but we're pretty sure they will. We had a lot of tough stocks. We expected this. We knew this was going to happen at some point in the first quarter, and it's exactly according to plan. So we held on to our cash. Exxon did well. Barclays did well. Barrick Gold did well. Nokia did well. Pfizer did well. So, we had a lot of stocks that we expected to hold on and do good, even no matter what happened in the market conditions. Other stocks we're making adjustments to, but they were stocks that we only took small positions in and wanted to add to if they got cheaper. So now they're cheaper.
When you talk about some of those stocks that have been resilient through the market sell-off, were they traditional defensive plays, or did you get a little creative with them?
Well, they were defensive to what we expected to happen. In other words, we knew, this is December when I was on the show last. We knew Trump had been elected. We had a pretty good idea of what his policies were going to be. So we decided that energy would do well because they paid him $1 billion to get elected. So obviously that would help. Barclays as a bank should do well. I like banks outside of America. Barrick Gold, obviously, because there would be chaos, and we expected that, and gold would go up. Nokia is isolated from all this nonsense, but they're doing great things with their stock. And Pfizer happened to be very cheap at the time, and we took advantage of that price drop and grabbed into it. And all the stocks we thought were good. The one we got burned on the most was really Lockheed. Lockheed hit us because they didn't get that contract we thought they were going to get.
When you mentioned gold, gold clearly has had quite the run, record territory of above $3,000 an ounce. What are your thoughts on gold going forward? More chaos, more uncertainty, still strength in gold? Yeah.
It's only day 65 or whatever in Trump's term, and we're at 33,000. We're over $3,000 on gold. I'm sure we're going to get to 35 and probably higher. But we play gold by, like I said about the miners, we like Barrick Gold. They've got 76 million ounces of proven gold reserves. They sell 5 million a year. They've got unproven reserves that are just as big as their proven reserves. And of course, they take some of that money every year and use it to buy more mines and keep their count basically the same while they make money selling the gold. So I love them. I think they're a great company.
What's the risk here, that everything just normalizes and suddenly we end up in a world where everyone gets along and the gold doesn't do as well?
Exactly. The risk is Trump says, you know what, this isn't a good way to do things. How about we all sit down with the Democrats and make everything work right, and we start talking about like normal trade negotiations, and everybody sits at a table with respect for each other? That would be terrible.
There you go. So that
also highly unlikely.
Wouldn't be constructive for gold. Yeah. We're going to get to some of your new trades in just a moment's time for the portfolio. But when you're thinking of new trades, take us through your process. What are some of the risks you watch for?
In general, look, the risks we watch for are, like today, consumer confidence was horrific. You see slowdowns in manufacturing. These tariffs are a terrible way to do business because, you tax it. In fact, I was just talking to people in the town I'm in down in Florida, and they're all freaking out because the Canadian tourists, you guys, are not coming. So that's trailing off already, and we haven't even hit the peak of the tariffs and the distortions and everything, this town, which is Delray Beach in Florida and Boynton Beach in Florida, they depend on Canadian tourism to survive. If they don't get it in the summer, they're not going to make it up. So, things like that. You've got to watch the knock-on effects of these tariffs and how they're impacting businesses in the U.S. or obviously, if you're in Canada, how they're impacting the businesses in Canada as well.
So those are the risks. How about when you're sniffing at opportunities? Because there's always risk and reward. That's the part of the exercise, right?
Well, sure. Look, you're changing the rules and in a drastic, sudden way. And so, here's a very important point. You've got to throw out the charts. You technical people have got to realize the fundamentals that built those charts, the conditions that caused the chart to look the way it does, no longer exist. So you can't depend on on the chart to keep doing what it's doing anymore, because everything has changed behind it. Everything that made that chart what it is disappearing, and you can't assume that the normal technical signals that you see are going to continue. That's a really, really important point that every analyst is missing this concept, that charts exist because fundamentals cause them to be drawn. And when you drastically break the fundamentals, that now the premise of the chart is no longer valid.